What's the most important thing you're watching, Steph?
Oh, there's so many things, Scott. First and foremost, I do not think we're out of the woods. I think this year is going to be volatile, and I think it's going to be choppy and a trading range at best. If we get resolution on the war, that's fabulous, right? But we still have to deal with inflation, and it's rampant. It's everywhere. And we get the PCE deflator on Thursday. In the non-farm payroll numbers on Friday, we get the wage numbers. Those are the two things if I could tell you I'm focused on, because inflation is everywhere, and I don't think the Fed can do anything really to change that. Even if they did 8 hikes this year, which is what the bond market is pricing in, I just don't think that that's going to mean anything to inflation. So we have to watch that. That being said.
What happens if they get help?
Right?
What happens if the Fed gets a little help? I mean, I'm talking like commodities.
Well,
maybe commodities have topped out. That'll be a big help.
It could be a help, and supply chains getting fixed could be a big help. And let's listen to what Micron has to say tonight after the close
in overtime
about supply chains. But in overtime, there you go. So let's listen to what they have to say, because that's going to be a very big report, a very big tell. That's certainly going to help inflation, the concerns that I have. But I'm still very worried about the wage numbers going up a lot. 5.5% is the number for average hourly earnings annualized for Friday. So watch that number. It's good for the consumer. It's bad for corporate America, right? So that's the one thing. Rents are going much higher. You look at the home prices, and they're up. Case-Shiller today was up 19.1%. We know rents follow home prices by a year. So rents are going up. Those two pieces I've been talking about for over a year, how sticky they are. And so that's why I am concerned that inflation isn't going to go away. And I don't think the Fed, with 8 hikes, maybe they have to do a lot more than 8 hikes, but that'll really slow the economy down. So what I think is really sort of interesting, though, in the last 2 weeks, and then what we have been seeing, is really more of a rotation into growth versus value, right? And I think you're going to continue to see rotations throughout the year. The Russell 1000 growth has outperformed the Russell 1000 value in the last 2 weeks alone by 700 basis points. So, and a lot of momentum stocks are in the growth indexes, as we know.
Of course.
And I think it's a function of I think it's a function of us being oversold, those sectors being oversold, growth in general as well. It's also recession fears. I'm not in that camp, but if we go into a recession, you're going to want to own more growth kinds of names. And I think it's mean reversion, because at one point this year, value outperformed.
You just said, hold on. You just said, I'm not in that camp. I mean, you sure sounded like you were camping. Because, I mean, you painted a whole scenario in which the Fed was going to have to raise rates so many times and inflation was so out of control. So you think they're going to be able to pull it all off? How can you make that case and then suggest, well, I'm not in the recession camp?
Well, I'm not in the recession camp for 2022, for sure. There's a lot that can happen between now and 2023. I do not think we're going to be into a recession, but we have no idea how the Fed is going to get out of this. And they sounded hawkish, really hawkish last week, much more so that the market kind of blew off. To be honest, I was surprised. But we'll have to see what they do. But they have to get inflation under control, and I think they can't get it totally under control. That being said, there is a lot of momentum in the economy, right? So I think from all of the fiscal and monetary policies that we put in place over the last 2 years, that's not just going to go away, even though they stop or they start to deteriorate those programs. So my point is, I'm not in the recession camp. I am in the slowing growth camp. I still think you can grow about 3% for 2022. We'll have to see about 23. But my point about talking about growth and the rotation growth into growth from value, I think some of it is because they got oversold. Some of it is this recession fears. And then some of it is mean reversion. At one point this year, value outperformed growth by 1,200 basis points. Value is still outperforming growth, but by 700 basis points. So that spread is narrowing. All of this are reasons why I have been balancing out my portfolio. I mean, all last year I was more cyclical, value, reopen. I got as much as 80% of my portfolio in those sectors last year. This year, I'm now about 60-40 into cyclicals and reopens and value still there. I still like those valuations especially, but I have been adding to more growth positions. I've talked about Apple. I've talked about Facebook. Expedia is also one. We're going to talk about another stock that I was buying later in the show. So I just feel like this is the year not to have big bets sector-wise and to be more balanced.
Well,